How we doing, friends? A little delayed, but I think it's better to show up late than to not show up at all. Here we are now for the monthly dividend portfolio review of June 2024. I know we're now in July, and sorry if I scared anybody. I'm always going to continue to make these videos. If I happen to forget an upload, it's because genuinely I forgot to upload. I did start a new job, getting slowly acclimated to my nurse consultant role, a role I've been wanting for a while. We also had some slight family adjustments. We got a new addition to the family. His name is Jet. He's gonna be slightly bigger than Archie. He's black, like jet black. And stay tuned to the end of the video. I'll show you a little clip of my two dogs. But here we are, friends. Time continues to pass. And I hope you guys continue on this journey with me. We're in 2024. Let's see where we are. In another year, that'll be 5. Another 5, that'll be 10. And we're just going to continue to push this thing forward. But enough with that ramble, friends. You guys know with these monthly dividend portfolio reviews, we go in depth, more in depth than we typically do. I'm going to tell you how much I fund my portfolio and how often. We'll go into my sector allocations and percentages. Along with that, I'll describe some of my best and worst performers per each sector. I'll also tell you my number of current holdings. This actually changed slightly. If you guys have seen some of my past videos, I did decide to sell Walgreens. I cut that thing out of here, kicked it to the curb. Now, I like their dividend. I didn't like them in my holdings. It was just a choice I had to make. And as far as my dividend portfolio's yield, I also share this with you, and my expense ratio. And of course, friends, we're all future thinkers here. We got to come up with plans, whether it's short or long-term plans. And I explain them, what they are for my portfolio. And at the very end, friends, I'm going to tell you how much my dividend portfolio currently pays me in dividends at its current size. For this video, I just want to end it with the topic of some motivation, of taking the leap. And the main thing that sparked this is just this recent level up for myself of, leaving being a floor nurse to going into a more nurse consultant type of nurse position, removed from bedside, removed from the floor, going into, I would say, a better, more advanced career path. So along with that, friends, just some motivation, just a reminder for all of us to continue to take the leap. So use the timestamps, friends. We'll make it through this video. Here we are, friends, in the Jesse's cash flow portfolio. You can see we're at $87,276.66. Of course, this is on the all-time charts. If you guys are new here or you've been here for a while, I always just like to remind everybody, I started this portfolio on July 20th of the year 2020, right after the crazy pandemic stuff, right when the market took it literally crashed. I wish I had a chart here to show you guys. You can go back to the Dow Jones in 2020 and you would see a very clear slice down and a very clear propelling movement upwards. Very clear, very defined. I didn't know it happened that way. I just knew that, hey, I've been in the workforce for about a year. I need to find an investing strategy for my future. I'm not getting into real estate yet. Let me think about something. And boom, I found dividend investing. And it also didn't help that I've been losing money during that time, playing with penny stocks, playing with crypto, feeling the psychological pulls of the very high highs and the low lows of growth stocks. I didn't like that. So that's what kind of got me into dividend investing. It's a very slow, watching the paint dry and the grass grow approach to wealth creation. But that's what I like about it, is I get to continue to build my career, continue to build the things that matter to me, like my relationships with my partner, being able to grow my career, think of things on the sides like hobbies like YouTube, and on the back end of all of this, be actually investing and creating wealth, right? It's the passive income pillow that I think we all want. At least it's why we're all here, right? We're all dividend investors because we do want that passive income pillow in future retirement, right? But friends, let's take a look here. M1 Finance continues their calculation here. It's a money weighted rate of return. I'm personally not a fan of it. So let me just show you this other one here. And as far as my cost basis, I have $70,000 invested. And then with the $17,000 unrealized gain, equates to the value, right, of $87,000. I just wanted to show you that one because this money weighted rate of return gets a little confusing. As far as dividends earned all time, it says 6,000. It's pretty neat. And let's see, just showing you some of the graphs over the past month. It's going up. The week, it's going up. 3 months, it's going up. Year to date, it's going up. It just continues, right? And that's a good thing. If you're in the market and you're playing the game, you get to see and experience the growth of the economy. But on the downside to it, everything's going up. That means prices of everything are going up with it, right? Your portfolio is going up, so is the price of McDonald's Big Mac, and that double at In-N-Out. Like, everything is going up. And sometimes, just from my perspective, I feel, because it's only me and my partner in our household. We have 2 dogs, but it's just her and I, right? We cook just for 2 people. Sometimes it feels like it is cheaper to just go out, buy something, than to buy all the ingredients and cook at home, right, for 2 people, which is pretty crazy. I mean, sure, if we eat rice and chicken, that'll be cheaper. But if we're trying to make like some good, like actual food, like shawarma chicken with some salad on the side and basmati rice or something, then like that might actually be more expensive sometimes. It just feels like it. And let's switch this back to the all-time. So going down on the all-time here, I'm gonna move these from sector allocations. Actually, let's do from a percentage. So real estate is the highest percent at 13. I have consumer staples followed at 12%, ETF at 10%, index fund at 10%, and so on and so forth. You can see it right here. You can see my percentages if you're curious. And one thing to always consider when I'm showing you just the statistics of my portfolio, I always leave a link in the description box to the M1 link where you can click on it. You can see all the details of my portfolio, such as if you click on real estate, and you could do this at your own leisure. You can click on my real estate sector or my slice here, and it'll tell you everything that I'm holding in it. I know when I first started being a dividend investor, it was nice to be able to compare, right, what other people had to what I was thinking about buying. It's not to copy, right, because we all have our own tolerance level, right? Our portfolio is going to be built on our own tolerance level, but it's nice to kind of get ideas. You can see, oh, I hold AMT, let me look into that. I hold Avalon Bay, maybe look into that. DLR, right, for example. And you just start to compare. Sometimes it's hard to know what to invest in if you actually really don't know what to invest in, right? You look at people's portfolios, you can get an idea, and then you can do further research from there, right? That's kind of what I did when I first started, and it's gonna be 4 years ago. But let's go ahead to the best performers here per sector. So tech is my best performer. If you guys have been here for a while, you know it's just significantly more than all my other sectors, and a big portion of that has to do with NVIDIA just ballooning. And it puts me in a tough position to let it ride because it continues to take and swallow this whole tech sector. I have not been given a reason to sell. I did sell a chunk of it, to go on a trip to Greece. So in a way, I'm even on it, right? And all this is just house money, but it does make it kind of difficult to just let it swallow my whole tech sector. Part of me wants to do the opposite of it and like sell a chunk and then spread it out, right, amongst the other holdings. I'm just going to leave it. It's just a decision I've made. They recently gave me even more shares, right, with the share split. I went from 8 shares to 84. 8.4 to 84 shares now. And I've just been not given any reason to sell, which is the tricky part. In the past, I've sold like Tesla and Amazon at the wrong times, and I always kind of kick myself for it. You're doomed if you do, doomed if you don't. Sometimes it's better to just trust your initial gut strategy, which is to buy and hold, which is what I've been doing. And as far as the second best sector performer, it looks like it's energy at 108%, followed by financials and industrials and index fund. If you're curious what this is, I have VIG. If you're curious what my ETF is, it is SPYD. And then let's go all the way to the bottom. So my worst performing sectors, one is consumer staples, one is healthcare. I just want to touch on consumer staples. This is where I used to have my Walgreens. My Walgreens was just drowning this whole entire sector here. It's finally beginning to recover. It's because I did sell Walgreens at a really big loss. I just had to cut ties with it. I didn't really believe in it anymore. The dividend was fine, but I just felt like when I zoom out and I look at everything that I've experienced in my life, that one's one that I think is going to go bankrupt and disappear, get bought out, and I just didn't want to be part of it, especially with Amazon and all these other online companies just trying to get a chunk of the pharmacy sector. And they're doing it, so yeah, it's just hard to watch. But now the only thing apart from Walgreens being gone, dropping this sector here is JM Smucker, just barely, like 1.7 in the red, and that's practically nothing. And as far as my holdings themselves, let me tell you which one my best performer is. You will already know. It is Nvidia. With an 842% gain. I don't know how they calculate it, but that's insane. If that is the case, it might be. And then ExxonMobil, 132%. I mean, I guess it is an 842% gain. That's insane. Oracle, 100%. Aflac, 78%, just to name a few. And then we're going to go down all the way to the bottom. And it used to be Walgreens. Now it's UGI and Pfizer. Just keeping these to stay diversified. Medtronic, again, just to stay diversified. But where there's green, there'll always be red. It's impossible to truly have an all green portfolio. So seeing red doesn't scare me. And as far as my activity, let me show you guys. Let's reminisce a little bit. My very first dividend payout was Apple, 8 pennies, back when I first started this thing. And now, I get paid quite a bit. VIG pays me $37. MDU pays me nearly $6. UGI, which we just saw was my worst performer, pays me $15, and CTI pays me $15. DLR pays me $20. Pepsi pays me $12. All just to name a few. And as far as my funding schedule and my rate, $100 a week divided by 52 weeks, it's about $430 every single month going into this portfolio. And then in this video as well, I'll tell you how much the dividend portfolio pays me itself in dividends for the year. And we'll get to that part. But $100 every week is what we currently do. In the past, when I very first started this portfolio, I was doing $500. I was doing $500 every week, which is about $2,000, over $2,000 every single month into this portfolio. But we took a step back on that because life happens. But I'm glad that at least when I first started, I just was really just shoving the ball up the hill. And now we're just kind of going up the hill. The way I look at it, it's better to continue slowly than to stop completely. That's my strategy. That's my mindset. I'm just trying to hold on to this pace. This is my bare minimum pace. All right. And here we are now with a little bit more of the data. So this is the Jesse's cash flow portfolio. And this is where my statistics are. So as far as holdings, I have 50. I did mention that. I sold Walgreens, so no longer 51. I like to have this many because I diversify my own portfolio. People have their own opinions about this. It has worked for me. It hasn't really hindered me in any which way that I believe. Sure, it could be better, but it's growing at a pace that I'm comfortable with, and I'm able to manage it, which is important. And as far as my dividend yield, it's 3.156%, and my expense ratio is 0.01%. So very, very small. So what are my current short and long-term plans for the portfolio? So my current short-term plan, friends, at this moment, because of my new job working from home as a nurse consultant 1, entry level, the idea is to eventually, put in 2 years, 3 years, and then increase my income, right? Continue to go down that path. But taking this job was actually a pay cut. That's why I had to really go bare bones on my funding amount for the dividend portfolio, which is $100 every week. My goal in the short term is just to continue to maintain this $100 every week and just continue probably over the next year for sure, 2 years, probably 3 years. That is like my short to medium term plan. My long term plan is eventually getting into real estate, hopefully within the next 5 years, and also longer view to retire comfortably, right? With a pension, because I do work for the state of California, with a dividend portfolio, and also real estate. And also, one thing I always say is, my goal is to retire as early as I can comfortably. My realistic marker is around 50 to 52 because I do work for the state. At that time, I can be eligible with my pension and also health insurance, right? But if it's sooner than that, better. But that is realistically the soonest I plan to retire at the latest, if that makes sense. The soonest and the latest. So those are my plans. And so here we are, friends. This is a Div Tracker app. It's just the app I personally use. Not sponsored by them or anything, but it's just the app that I use to actually calculate my dividends. So as you can see, we're only a penny off with M1 and the tracker itself at $87,276.65 compared to 66 cents. So let's see. So the annual dividend income, it says we're now at $2,450.57. So that is how much my dividend portfolio pays me currently as it sits. And then my yield is 2.81%. It's 2.81% here on M1 Finance. It says it's 3.1, I believe. I don't know what the difference is, but that's a discrepancy of some sort. If anything, I would lean towards M1, and that would mean it's more. But if not, we'll go with the calculator here for now, right? And if not, maybe it's somewhere in between, right? But either way, it does make me happy to see I'm only $50 away from my actual goal here of $2,500 of a dividend payout. I'm 98% reached, and it says I do need to invest $1,413 at my current portfolio's yield if I want to reach this goal. So here we are, friends, getting us to think about time again. And by that, I mean it continues to pass, right? You can't just hold on to time. You can't put time in a jar and just capture it and allow it to never change, or, you could try to buy it up to a point. And I think that's what a lot of us are after, right? Getting to a good place financially where it's like you can live with the new level of freedom potentially. I know it's one thing I kind of strive for, but because of all of this, friends, continue to take the leap, continue to move forward. Always try to avoid stagnation. And if you do stay stagnated, if you do feel stuck, allow it, but don't stay there forever, right? Because the whole time, the timer's going off, and you're eventually going to get to a place where the goals and the dreams that you have for your life are only going to get harder and harder to do, right? Let's say in your 20s and you have dreams and goals and ambitions, but as you turn 30, as you turn 40, as you turn 50, these opportunities are going to become harder and harder because your life's going to get busier and busier. It's not impossible. That's not what I'm trying to say. But I'm just trying to say continue to move, and continue to move with urgency, because this time is finite. And it is the biggest exchange of currency. You have to kind of change and invest your time for a better return. Or you can just completely waste it. You could spend your money wastefully. You could also spend your time wastefully. You can invest your time wisely. You can invest your money wisely. There's just some easy comparisons I like to make. And as far as the conundrum, what I meant by this, friends, is that, again, when you think about time, and you think about the present moment, and you think about the future moment, it's very hard to live for today while simultaneously trying to live for tomorrow. It's always a balancing act. It's always like, where do I put the most of my energy? Today or into tomorrow, right? If you're grinding for a better tomorrow, you're kind of sacrificing today in your present moment. But if you live too heavy and live too much in the present moment, you're sacrificing your future. Let's take money as an example. If all you're doing is just spending your money, going on trips, building experiences today, you're kind of sacrificing financial comfort in the future, financial stability in the future. But if you're also just penny pinching and just very frugal with your money today, not living in the present day, and you're saving it all for the future, then you're also not living and making experiences today. So it's always a balancing act. It's always very difficult. I call it life's greatest conundrum. That, to me, is life's greatest conundrum. It's hard to crack that code. So friends, I just want to end by saying, continue on your dreams, continue on your goals, continue on your ambitions. And if you don't have any, sit with yourself, take time to really use your life and look at it like a canvas, right? You're the painter holding the paintbrush, and your life is the canvas. Really just sit with yourself and think about what you want in your life and put it all on this like canvas, right? On this horizon, right? And also include your present day and your future self. Live in the moment. Think of what you would need today, and then also have nice big dreams and goals that you kind of put out on a mountain, and just know that it orients you. That way, every decision you make on your day-to-day basis is with that horizon, that mountain in view, knowing that, hey, I'm still living today, and everything I'm doing today is for the better of me tomorrow, is the main message I want you guys to leave with. How we doing, friends? There's my There's my desk right here when I work from home. And then I just wanted to show you. This is a new addition to the family right here. This is Jet. Say hi, Jet. You can see he has all the toys because he steals them from Archie. And he just has to lay in them. And then there's Archie. And then here, I shoot my video. And as always, friends, sorry for any scares. I will always be here. I did skip a week, but hey, life will get busy sometimes. But I will be here, friends. And as always, continue on your own dividend journey. I wish you nothing but the best. We are all in this together. We are all trying to build that passive income pillow, that nice stream of income. It'll happen. It's happening already. It's just happening slowly. See you on the next one.